Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. Today's date is September 30th, last day of the month, last day of the quarter. So that may have an impact on liquidity conditions today in not only the Forex market, but also the stock markets as well. In any way, this is the Kickstart video where I take a look at three of the major currency pairs to start your trading week. The euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. I'm going to take a look at the hourly chart to start things off. And what we saw in the end of last week was lots of up and down volatility here. In Friday, the market did come down to test its 200-hour moving average here during the U.S. session and rotated to the upside, closing above both the 200 and the 100-hour moving averages and trading here today. You can see that the price tried to move below the 100-bar moving average, or 100-hour moving average, I should say, on not one but two different occasions. And the last time the market moved down to test the low of the day, but could not get very far, and then rotated back to the upside. We've been running to the upside since that time. So we have moved above things like this swing high going back to the month of August. We did not move above the high price from last week. However, that level came in at the 112.13 level. And we did get above the 112 level, which is this level right here. So the price tried, but I couldn't do it. And we've since rotated. We're currently trading around the 111.90 level, which is right around this swing area through here, which I had earmarked between the 111.81 and 111.90 level. So it's trading right near the high of that swing area here, but clearly getting above the 112 level and staying above that level, getting above the 112.13 level is going to be required to increase the bullish bias here for the euro versus US dollar. What does that look like on the daily chart? Well, if I had the 111.84 level as a level of importance, and that goes back to this low right here and this high right here before the market started its run to the downside through here in 2022. We did move above that area here, but and then fell back below it here. And in trading, not last week, but the week before, we tried to move above the 111.84 level again, getting up toward the 112 level on trading last week. We tried a number of different times to get above that level as well. So in addition to the 112 level, watch the 111.84 level on the downside. On the top side, if we do break to the upside, get above that 13-ish type level, then we start to look toward the 61.8% retracement, which happened to also correspond with this high going back to 2023. So be aware that the area comes near the 112.71 level. Let's take a look at the dollar versus yen next. And on this currency pair, we did see a sharp run to the downside and trading on Friday after trying its run to the upside here. The move to the downside took the price back below the 100 and 200-hour moving averages, and then rotated all the way down to this swing area through here, eventually in trading here today, where we found support buyers near the 141.69 level. The area down here comes between 140, 169, 140, 194. It's defined by a number of different swing lows and swing highs going back through here, and here before moving to the upside here. We came back down to that lower of that swing area. So finding support against that level and pushing back to the upside. We retraced the declines in trading here today, getting up to the 38.2% retrace move, be the next target at 143.32, and then followed by the 200-hour moving edge at 143.47.8 and the 100-hour moving edge at 143.76. So this cluster of technical levels from the 38.2 to the 200 to the 100-hour moving average, a key targets on the top side for the dollar versus yen. So be aware of those levels on further upside momentum. Finally, let's take a look at the sterling versus US dollar. What sticks out to me on this chart is how the price has been trying to get below the 100-hour moving average. And each time it tries to get below that level, like right here, like right here, like right here, like right here, it has failed on those without getting too far below that level. The current 100-hour moving average comes in at 133.81, and we're just above that level on 133.82. So we're trying to push further, break below this level once again after the last move to the upside took the price and fell short of these highs up here. We do have a pretty decent ceiling coming into play up here near the 134.29 level and to 134.33 level. So but the last 2 days have seen lower highs coming through here. So that there's a battle going on, folks, and the battle will use the 100-hour moving average as one of those levels on the downside. Get below that, stay below that level, and we start to look toward this level right through here, and then we'll look toward the 200-hour moving average in this swing area right down here, and get below those levels. It opens the door to the downside. Conversely, if we do stay above this 100-hour moving average, we still got the highs to get to and through. They come, the highest highs come between 134.29 and 134.33. Get and stay above those levels. Opens the door for further upside momentum. Taking a look at the daily chart to see where we're at. The high prices that we saw, or actually I'll take a look at the weekly chart. The high prices that we saw last week took the price within this swing area between 134.11 and 135.11. So get above those levels and are into this yellow area right through here, and we start to look toward the 135.11 level. So there you have it. A look at that. 3 of the major currency pairs. Just kickstart your trading day for the and the trading week. My name is Greg Mikulowski. Good fortune to trading. Bye bye now.